Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some stocks that reported earnings and some stocks that are getting ready to report. Yeah, tomorrow's going to be a big day. This is the July 25th earnings calendar. As you can see, there's a lot of companies reporting either before the market opens or after the market closes, so it's going to be a really busy day tomorrow. Google did report yesterday, and it ended up running after hours yesterday. Had a big gap up open today. It did close below the open, forming a black candle. So yeah, the black candle forms when the stock's up on the day but below the open. It signals that the bears were trying to drive the price down. Notice the lower wick on today's candle. That did signal that the bulls were driving it off of low of day. Today's candle did form above the upper Bollinger Band. So yeah, you always, when that happens, you always have to keep an eye out for the candles working back into the bands. There is a gap between low of day today and high of day yesterday. A drop down there to that 1211 level in EMA 8, that line would fill the gap. The key now is to stay above the closing price on the 17th. As long as it stays above that level, the uptrend should continue and it should keep pushing higher. Notice the big volume spike. You know, if it were to drop below that 1211, that would be a red flag and it could possibly consolidate. Okay, if you look at Google here on the 15-minute chart, you can see after the gap up open here when the black candle formed, they faded the rally and it pulled back. It did find support down here at 1245. It bounced. It got back above the middle Bollinger Band. That's the dotted purple line at 1255 on the close. It did also break above this red descending resistance line. So the key now is to stay above 1255, 1256. If it can do that, look for a run back up here to this high close at 10 o'clock. If it can break through this 1268 to 1270 resistance zone, then that'll signal that it wants to keep breaking out higher. If you see it drop below 1255, it could drop down to 1245 and test the low close for today, down here around 1245.50. If it were to drop below that level, then it could come down here and test the bottom of the channel today, which is down here where the 50 simple moving average is at, down here around 1234. Okay, if you look at Facebook here, they're going to be reporting tomorrow. It's on a blue sky breakout right now. It's hitting new all-time highs. It has a really nice uptrend going. Candles have been riding EMA 4 support currently at 211.70. As long as that level's holding this pink line, the signal is just to keep riding. It's super strong. This is a blue sky breakout. It's at new all-time high levels. The only resistance above is the intraday resistance from today. There's a gap between high of day yesterday and low of day today. If the share price did pull back and test EMA 4, that gap would fill. If it does get a close below EMA 4, that would be a signal that it could possibly consolidate and pull back. Last time it did that in June, it did come down there, test the middle Bollinger Band, and it bounced off of that level. If you look here at the Facebook monthly chart, you can see the best thing has been just a ride. Since the dip back here in 2012, it's been all up. And so, you know, if that trend continues, Facebook should continue heading higher. You can see here it's at all-time highs. It's on a 4-month run. It's pushing really hard. It's hitting that upper Bollinger Band. And so now it would need to keep pushing higher. Yeah, if it did pull back, the big support level would be EMA 4 at 197. You want to see that level hold. If it were to drop below with the monthly close below, then it could cool down and consolidate. But the chart is strong. The long-term outlook is, the long term it has been to keep riding. That has been the way. That has been the big payoff. And yeah, if it were to start to break down, then that would change. But when you have such a strong uptrend like this, if you have the time to wait, sometimes the best thing to do is just to keep riding. If you look here at the 15-minute chart, and I know a lot of people are just traders, and so you're looking for the short-term movements. And so here on the 15-minute chart, the big level to break is going to be this high close at 216. It's going to need a break above 216 and close above that level to signal it wants to keep pushing higher. If it fails to get above 216, then it could pull back. With the earnings, it's likely to have a gap up or a gap down tomorrow. And so trading above 216 would signal that it wants to keep pushing higher. If, let's say, it gaps up above 216 tomorrow and then they pull it back, and it starts getting the black candle going, if it drops back below 216, that would be a red flag. And then to the downside, if it dropped below this 212.50 to 213 level, that would be a red flag as well. That would signal the chart is breaking down. Okay, take a look at IRBT here. This had a big move in after-hours trading today. As you can see, that they had really walked this thing down. Look at how they walked it down, and then today there was a huge volume spike off of the 250-day simple moving averages, and so that was the key level to hold. People loaded heavy. They're getting rewarded. The share price now is at 84.62. That puts it above the high close resistance level from July up here around 81.50, and so this will be the key level to stay above. If it pulls back tomorrow at all, you want to see it stay above this 81 to 82 level, the high close from the first week of July. If it were to drop below, then it could consolidate. Right now, it's looking like it's super hot. It's breaking out higher, and so what we're looking at now is the weekly chart. You can see it had been trending down. It has the descending resistance and then the descending support, and right now the share price at 84.50 is hitting that descending resistance line, and so if it can break above that 84.85 level, that would be really bullish, and it could possibly, then you'd be looking at it possibly retracing back up to that 2018 high close around $94. If it were to fail to break above this descending resistance line and fail to get above 84, then that could signal a possible temporary top. Right now it's bouncing off of the 100-week moving average at 70.41. That was the big level to hold. Huge move. Congrats to everybody that was in this, that loaded beforehand. It's going to be a big winner tomorrow. Okay, check out AMD. They're going to be reporting tomorrow. It has been trading in the sideways channel for the last couple of weeks. It's hitting the key 17 resistance zone. The closing price here on the 18th is a big level to break. If it can get above 17, that should signal it wants to head higher. If it drops below the middle Bollinger Band at 1607, that would signal it's not ready to go, consolidation, and it could pull back and test that 50-day simple moving average at $15. And so going forward, above 17 signals upside potential, below 16 signals downside risk. If you look at AMD here on the monthly chart, you can see here it's trying to break out the last couple months. The high close in 2017 was broken last month with the close above, and so last month was the highest close of 2018. It was above the 2017 close, and then you had to go all the way back here to 2007 to find the last close above last month's close. And so that was a major breakout. You had to go back 10, 11 years to find the next key resistance levels, and so now it's going to have to break through this resistance back here between 17 and 18. If it can get above that, possibly this 22 level could be the upside potential. This is looks like it's filling the jar. It's working its way back up to these prior levels. This looks like it's not a clear triple bottom because they weren't at an equal level, but this has the triple bottom type of setup and then the big breakout afterwards. And so it looks like it's doing the classic filling the jar. It came down and it's working its way back up to all these prior resistance levels. Okay, let's look at FCX here. Okay, so this as and to the downside, if things don't go good and it drops back below 1446, that would signal that would be a red flag. You want to see it stay above this 1450 resistance zone for the month. This month's candle will not set until the closing bell on the last trading day of the month. Okay, so FCX, they're reporting. This is in the non-ferrous metals materials sector, and so that there's been a lot of talk about uranium tariffs. There hasn't been much follow through on that. This came down and it bounced off of the 300-day simple moving average at 1567. That's the big level to hold. Notice it had the gap up open today, and then they pulled it back, forming the black candle. It did close just above EMA 4 at 1606. That's the key level to stay above. And then you can see here all the moving averages are all converged here, or not all of them, but there's 4 major moving averages here: the 20, 50, 100, and 200-day simple moving averages. And so if it can bust above 1686 and then above 1713, that would be really bullish, and it could run back up to this 18 resistance zone. That's the top of this current channel that it's in. You can see here, this is kind of the bottom. It did come down here in May, and it's hit this zone, multiple times. It's bouncing off the bottom again, and so the key would be to come back up here to 18 and then bust through, and if it did that, it could come back over and test that April zone. Now, if it responds negatively to earnings, you're going to know that it's a major downside risk if it drops below 1550. The 300-day simple moving average is always a key support zone. Notice how the bounces are right off that level. Stocks are severely broken that start trading below. Okay, so PayPal is reporting tomorrow as well. This is another blue sky breakout. This thing is has a really strong uptrend. It broke out today higher, hitting 92, going at hitting all-time high levels. There is a gap between high of day yesterday and low of day today. So on a pullback down to EMA4 there at 89.54, that would fill the gap. What you're looking for here, it looks like EMA 13 has been this big level that's been holding on the dips, and so long as it's staying above EMA 13 and then the middle Bollinger Band at 86 is holding, the uptrend's intact. It has a good uptrend. It's been pushing higher. It's made a really nice 3-day move here heading into earnings, and so if they have good earnings, it could bust out higher and head to these to new blue sky levels. If earnings don't go well, if it gets below 86, that's going to be a major red flag. It needs to stay above that middle Bollinger Band to keep the uptrend going. If you look at PayPal on the monthly chart, you can see here it started trading back here in 2015, and it's been on this really nice run since basically since it bottomed down here in 2015. It's been in a nice steady uptrend. As long as EMA 8 at 80 is holding, the uptrend is intact, and it's signaling that it wants to keep pushing higher. Right now, what you want to see is a monthly close above the closing price, the monthly close here on the January of 2018, and so if it can stay above this 84, 80 level, then for the month, that would be really bullish. You want to see it make a new monthly high close. If it were to drop back, if earnings don't go well, and it pulled back and it failed to close above this level, that would be a major red flag. That would be signaling this 84, 85 level is a big resistance level. If it were to turn 85 into support, that would be really bullish, and that would signal that the uptrend should continue. Okay, let's look at UPS. They're going to be reporting as well tomorrow. The share price came down. It made a nice run off of 106. I mean, it held this level, and it ran for the last couple of weeks. It's right up at the 250-day simple moving averages, this 113 resistance zone, and so going forward above 113, basically, to be exact, this 113.33 level is going to signal upside potential, and then you'd be looking for a possible retrace back up to 118, 118.50, the high close from June. Fail to break this 113 level and fail to hold the 112 support level, this 300-day simple moving average at 111.82 would signal that it's not ready to go, and the share price could pull back, possibly test this middle Bollinger Band down here at 109. It has a lot of support here. Look at all the moving averages are converged here between this 109 and 113 level. All the moving averages that we follow. So above 113 would be very bullish, signaling upside potential. Below 109 would signal downside risk. Okay, take a look at SIRI. So yeah, I haven't looked at SIRI in a while, and I do like their service. They are reporting tomorrow, and yeah, the chart was heating up over here. It had got above the middle Bollinger Band and the 50-day simple moving average at 707, but it dropped back below the 50-day simple moving average. Right now, it closed right at that middle Bollinger Band at 698. If it could stay above 7 and break above 707, then it could get a new uptrend going. It's trying to get a new uptrend. Now, if it dropped below 7, that would be a red flag, and what you'd be looking for is this 100-day simple moving average at 671. That's lined up with the low close there in June. That level needs to hold. That's the lower Bollinger Band as well. So on a pullback, look for 671 as support. To the upside, what you're looking for is this gap. There's a gap between low of day here on the 20th and high of day on the 21st. And so above the 50-day simple moving average, and then the high close here from the, what is that, the 20th? Of July would put the 730 bottom of the gap level on deck. A run up to just above 740 would fill the gap. Okay, let's look at GM. They're reporting tomorrow. We have GM and Ford reporting. I believe GM is before the open. Ford will be after the close. So yeah, you'll have some more. You'll have more time on Ford. Yeah, to see how GM plays out. Maybe that'll give some clues on how Ford could respond. But if you look here at the GM chart, you could see here it's consolidated sideways. It's in this holding pattern leading up to earnings, and so you have the sideways channel going, and so it's going to be all about breaking resistance for the bulls. Can it get above this 50 and 200-day simple moving averages lined up at that 40.37 level? If it can break above that, that's a signal it wants to head higher. You know, but to the downside, it's been holding this 100-day simple moving average, and now the 300-day simple moving average. They're lined up here between 38.43 and 38.70. You know, if it were to drop below 38.40, that would signal downside risk. A break above 40.40 would signal upside potential. It's in a tight range here. It's going to bust out to either direction. Very, very bearish if it drops below that 300-day simple moving average. If that happens, there is this gap over here. You can see the gap between high of day on the 30th of May and low of day on the 31st. And so what you'd be looking for is a drop down to the bottom of the gap at 37.50. Okay, to the upside, if it breaks out above that 200-day simple moving average, you know, then you're looking for the share price to work its way back up. It does look like there is an unfilled gap up here, way up here around 43.25 or so. There's an unfilled gap up there. Okay, so let's look at Ford. So Ford, it has a really ugly chart. General Motors chart's doing much better. You can see this did break below the 300-day simple moving average. It's always very bearish when that level breaks. It's currently trading below all the moving averages that we follow, including EMA 4. Notice how the upper wick hit EMA 13 and the bears drove it down. The bears are so strong here. You know, people are just killing it. You know, if you shorted here on the break below the middle Bollinger Band, or if somehow you timed it up here at the top, you know, you've just been killing it, riding it all the way down. Now the bulls are going to get a turn if they finally let it close above this EMA 4 level. If it gets above 1058, that would signal that it's bouncing. You know, it needs to close above that level. The last close above was back here, and it failed to stay above, and it kept pulling back. It has a lot of work to do. I mean, you have the EMA 8, 13, the middle Bollinger Band, the 300, the 100-day simple moving average. Just a lot of resistance between 1050 and $11. Getting above 11.05, that would be bullish. Okay, let's look at LVS here. So Las Vegas Sands reports tomorrow as well. And so this chart is trying to heat up into earnings. It looks like today the gap filled. Let's see here. There's a gap between high of day on the first day of July and low of day on the first day of, or the last day of June. And so it looks here like the gap did fill. And so you've got a gap fill with this upper wick, and then they pulled it back after filling the gap. Keep in mind, many times a gap fill can be a climax event. People will look to lock in gains on a gap fill, especially if the share price fails to break above. What has to happen is it has to break above the top of the gap, and that level has to turn into support. If it pulls back, that signals, you know, consolidation, people taking profits, etc. Right now, it's all about two levels: the middle Bollinger Band and the 100-day simple moving average. If it can stay above 74 and then get above that 74.63 level, that gold line, then that should signal the possible start of a new uptrend. You're going to know if things are not going well if it's trading below that 74 level. If it drops down below 74, that's going to signal downside risk, especially if it gets below the bottom of the gap level again, down here below 73. If that happens, you could see a drop down to the 200-day simple moving average at 71.23. If news is good and it does break out higher, the big levels to break is going to be, you know, the top of the gap again at 76, and then the 50-day simple moving average at 76.71. Okay, so take a look at safe bulkers here. Okay, this is just a penny stock. I think this will be a good one to keep an eye on. They're going to report earnings tomorrow for people that trade the marine transportation sector. You can see up here the marine transportation. That's like dry ships, DRYS, tops, all those stocks that sometimes make big runs. SB is another one. You can see it, it made a nice run back here between May and June. It's consolidated into earnings. It's holding the 100 and 200 day simple moving averages, and it's hitting the middle Bollinger Band and the 50-day simple moving average. And so basically, if it can break above 350, that green line, that should signal that it wants to head higher, and then you could possibly see it retrace back up to 390. That would be if things go well. If things go bad and it breaks below the 200-day simple moving average, currently at that 337 level, then it could possibly drop down and test the 300-day simple moving average down here at 312. So above 350, the upside potential is if it gets through above this high close here at 360, it could run up to this 385, 390 level. The downside risk is if it drops below that 340 support zone, it could drop down to that 300-day simple moving average at 312. Okay, so take a look at GE. Yeah, they reported what was it last week, and things didn't go so well for them. They reported here on Friday when they had the big drop, and then they had another drop on Monday, and then today a white candle formed off of the lower Bollinger Band support level. Notice how it is making a lower or a higher low here. Now it could drop down and retest this level, but there was a low down here in June, and then now the July low is a little bit higher, and so I'm going by the closes here. This is the low close, and this is the close, the bottom of this red candle. The close on today's candle is up here, and so you can see it's trying to make higher close. And so the red flag's going to be if it drops down here and it closes below the closing price here around 1275. If it were to close below this green line, that would signal downside risk and it's heading lower. To the upside, what needs to happen, it needs to break above EMA 4 at 1323. Once it breaks above that level, that would be a signal that it wants to make a bullish move higher, similar to over here back in June. Failed to break EMA 4 at 1323, and that'll signal the bulls or bears are still in control. If you look here, it formed a bullish engulfing reversal pattern today, and so that is a strong reversal pattern. We will be looking for confirmation. You can see the white candle today engulfed the previous red candle. Back here in June when it formed a similar pattern, it did form a red candle the next day, and then it popped that following day. So we're going to see here if they can confirm the bullish engulfing. After hours today, there was a big trade. You can see down here there was some action coming through, and there was over $1 million trade. After hours, so something to keep in mind. There were some big trades going through. GE always has a lot of big block trades going through. It's a popular stock to trade for the big volume traders. And what happened here on the 15-minute chart today is it got above that 50-day simple or 50 simple moving average here at 1230. That was the key level to break. I guess it got right above it. It broke above for the first close at 1215. That was the key level to turn into support. It finally did here into the close, and so that's going to be the key level to stay above. If you can stay above the middle Bollinger Band at 1306 and the 50 simple moving average at 1303, that's going to signal that it has potential to push higher, and then we'd be looking for a run up to here to the 100 simple moving average at 1321. That's going to be the big level to break. If it can get above that, the high close from the 20th was 1330. And so 1330 is going to be the big level to break. So the two big levels are 1321, 1330. Get above both those, and it's the 200 simple moving average at 1351. Right now, it closed above the high close here from the 23rd, and that is signaling more upside potential. It closed at the highest close of today. What was the last candle of the day? So it was strong into the close on a volume spike, and so we'll see if it can keep pushing higher. Above 13 signals upside potential. If it drops below 13, that's going to signal downside risk. Notice how tight the Bollinger Bands are here. The Bollinger Bands got super tight, and then it's pushing to the upside. Many times that signals that it wants to head higher. We'll see. GE has lots of head fakes, and it's just one of those stocks that has lots of selling pressure. Okay, let's look at FIT here, Fitbit. I'm showing you this one because they had some, it made the StockTwits trending list after hours. Not sure why. They don't report until the start of August. I think August 1st is their report date. And you can see here that it's been on a 5-day pullback. It pulled back down here. It's hitting this key support zone. You have the 100, 200, and 300-day simple moving averages all lined up. You know, 575 is the reload zone if support holds. I mean, this is where it should hold. If it dropped below that 574 level, that would be major downside risk. It could really break down lower. I mean, heading into earnings, not sure who's going to be placing their bets here, but it's been getting a lot of volume. And so it looks like you know, this will be a stock next week that'll be in play with the earnings. You know, 5 days down and rebound is a good bounce play setup. It's going to be all about breaking above EMA 4 at 615 and then getting above this 50-day simple moving average at 634. So keep an eye on Fitbit for a possible technical bounce after an oversold condition. Keep in mind that they will be reporting earnings. I believe it's on the I believe it's on the 1st. Okay, thanks for doing this video. It's going to be a big earnings day tomorrow. It's been a big earnings. You know, so far the second quarter has been going pretty steady. A lot of option traders have been getting wiped out on their premium on the gap ups and the pullbacks. So keep in mind, if you're up on the gap up open and the stock starts to fade, you know, your premium on your call options will get wiped out. And so you know, the key is to lock in those gains. Same thing if you're up on a big drop, and then they start rallying off the bottom, that's going to wipe out your premium. So yeah, keep that in mind. Long lower wicks are not your friend if you've bought the puts. Okay, thanks for doing this video. Come check out the chat. Thanks.